Welcome to the latest episode of MEPS International Speaking of Steel podcast. This month, we're featuring a US elections special in the wake of Donald Trump's re-election as 47th President of the United States. I'm joined by three of MEPS' top analysts, and they'll be sharing their insight today. I'll introduce you to them now. Shortly, we'll be hearing from Laura Hodges, who's our US consultant, and she'll be outlining the view and the way forward from that side of the Atlantic. But without further ado, Jon Carruthers-Green, welcome to the podcast. Yeah, great to see you again.
Yeah, it should be an interesting one.
It will be an interesting conversation. Thanks for joining us. Michelle Kirton, you're coming in with a slight stainless steel slant on this one. It's clearly your speciality, so hopefully you're looking forward to share a bit of insight today.
Yeah, thanks for asking me again. Yeah,
great stuff. Good to have you on. And Stuart Gray, good to have you back on.
Thank you.
You're clearly excited to talk about, the prospects for the US market.
Yeah, it's been an extraordinary election up to now, and leading up, and a surprise, I suppose, for many with regards to the outcome.
Yeah, maybe.
And it will have ramifications for the steel market.
Great stuff. Well, we'll see. We'll be talking about those. Initially, we'll listen to an interview that I previously recorded with Laura Hodges. Here you go. Welcome, Laura. Welcome back to the MEPS Speaking of Steel podcast. It's great to have you on again and have you here to share your insight.
Thanks for having me.
It's clearly been a momentous week in US politics. The election outcome has ended quite a bit of uncertainty, and that's what we're here to discuss today, of course. I mean, before we go into the deeper issues, can we just reflect a little bit on where US steel prices are now and perhaps what the effect of the election's outcome might be?
Certainly. It's a great place to start. In a nutshell, the U.S. steel markets have been in a holding pattern, both in terms of demand and prices, with HRC prices hovering for the past couple of months near $700 a short ton. Our current forecast, and of course this was done prior to the election, had prices holding through the end of the year and before starting to rebound in the first half of 2025. Led primarily due to, these lower interest rates starting to finally kick in. And of course, why we're here today, which is the election uncertainty, which has really been hamstringing markets right now, at least according to our MEPS research partners, as well as even we heard that echoed throughout some of the disappointing results from U.S. producers in the third quarter. They just released their earnings report, and that was certainly a sentiment released by them. So both of those aspects were, lower interest rates and the elimination of this election uncertainty were going to be lifted, and we were expecting prices to rebound already in the first half of 2025. What does the Trump presidency mean for steel markets? I think, right now there's, as you mentioned, still a lot of there's uncertainty. I mean, there's campaign promises and then there's the reality. But I do think that the Trump presidency does deliver an upside price risk to U.S. steel markets in the near term, primarily due to a stronger protectionism in U.S. markets. I do think yesterday's stock market performance sort of confirmed that feeling. We did have a strong results coming out of U.S. stock markets yesterday after the election was announced. Election results were announced sort of late evening, sort of early morning on Wednesday, and then. But the more remarkable thing, and the reason I mention it, is that the steel stocks had even an above average reaction as well. Overall U.S. Stock market indices increased around 2 to 3%. The steel market producers, Nucor, Steel Dynamics, U.S. Steel, and Cleveland Cliffs all increased almost, if not double digits. Cleveland Cliffs stock price increased 20% yesterday. So there's the market certainly kind of confirming this upside price risk that I'm referring to here.
Wow, and we saw Tesla rise as well, of course.
Yes.
Interesting dynamic to think about. You touched on the protectionism issue there. We've heard a lot of talk during the campaign from Donald Trump about tariffs and their application. How's that going to affect steel going forward?
I do think that that's going to be one of the reasons for the upside price risk under the Trump presidency in the near term. Trump has promised to increase tariffs on all goods coming into the U.S., at least 10%, and an additional 60% on Chinese goods. Now, while the U.S. market is already one of the most tariffed sectors in the U.S. economy, anytime you do raise tariffs, not all products are tariffed right now outside of steel markets, but that's going to reduce supply. And hence, that's why the expectation is that, at least we think that prices would rise accordingly, especially if demand does come back in the first quarter. So, and in the first half of next year. So, I do think that has the potential to reduce supply. One area to particularly watch in the near term, because it will have a very near-term implication, is Mexico. As you know, they're a huge partner for the U.S. economy in terms of imports and exports. But the Mexican economy, the tariffs could be used in one of his biggest campaign issues, which is immigration. He has mentioned that he would like to use tariffs to help enact greater discipline immigration discipline coming out of the Mexican government. So if that were to happen, that could certainly curtail supply here in the U.S. For long products, Mexico is the second largest importer, and for flat products, it's the fourth. So, if you start to really pull back on some of that, and demand is going to be increasing in the first half, this could have, even a larger lift on prices in the first half of next year.
So that's a clear area where changes are expected, really. In terms of those government measures that have been put in place and have so far supported various industries with funding, do we think that those will continue in the future under Trump?
Areas where they may not, and there's certainly areas where they will. And as you know, in the government stimulus programs, the investment programs that were enacted over the past, 4 years were certainly a key part to our near-term outlook as well. Areas where I don't think that they'll be impacted, the Trump presidency, I don't think he'll touch the Infrastructure Act. That's the massive infrastructure bill that has been going on for 3 years, expected to increase funding in the near term even further, and to positively impact steel markets in the future. That had bipartisan support going into it, and I would imagine that that's not going to be taken away. The CHIPS Act, while he has mentioned he would have done it differently, CHIPS Act is the encouragement of investment through subsidies to the semiconductor industry. He has mentioned that he would have preferred to use tariffs to encourage more domestic production, but he didn't necessarily signal that he was going to take that away. And further, most of the income or most of the spending has already been allocated, not necessarily dispersed, but allocated. So there is some room for changes there, but I would expect that would be largely untouched. The IRA is really, the Inflation Reduction Act is really the one that has and is expected to be the one that has the most turbulence going forward. The tax credits for clean energy, certainly at risk. He's targeted that to kind of save money to implement other tax cuts. And so that is an area, on offshore wind, most of the provisions there could be at risk. The only thing that may save is that a lot of these investments have been done in Republican states, and there has been some indication that the Republican senators and Congress folks would love to keep some of that on the ground. So that's really, I think most shouldn't be at risk, but there are certainly areas, particularly in the IRA, that will be.
Okay. But I mean, one topic that's been a huge point of interest for us at MEPS, and I imagine a huge topic of conversation in the US has been that planned takeover by Nippon Steel of US Steel. Does this change the outlook for that deal going forward, or are things as they were?
It was left up to President-elect Trump. The deal would not go through. He does stand on an America First platform, and he has been very vocal against Nippon buying U.S. Steel. That said, I'm not sure if it's going to be in his hands to make that decision. This has already been a very highly unprecedented case, but right now the review is sitting with CFIUS, the Center for Foreign Investment in the United States, and they're conducting a second 90-day review of this acquisition. So I do think that and that review should be concluding near Christmas. If I did my math correctly, it should be December 23rd. And then President Biden has 15 days to act on that. There could be a delay on that. This has been a highly unprecedented case for CFIUS, but, it may not fall into President Trump's hands. And, Biden could approve it based upon the decision coming out of CFIUS. But we'll know in a couple of months, and hopefully this will be closed. Nippon did release their second quarter earnings today, which is really the third quarter in calendar year basis. But they signaled that they are still expecting this to close by the end of the year.
Okay, well, there are a huge amount of subjects that we could cover off, really, and a huge amount of permutations that we could consider, and we will be considering.
Yes, we will.
In the coming months. But we'll try and explore those in the wider podcast, Laura. And thanks ever so much for being able to take the time and join us and discuss it in person today.
Of course, thanks for having me. Until next time.
Thanks ever so much.
Bye-bye.
Bye-bye. Okay, well, Stuart, I mean, we've been obviously talking to MEPS research contacts as always on an ongoing basis. You speak to contacts in the US. I think at this stage it's probably important that we reflect on where the market has been in recent months and just perhaps reflect on how this might affect things going forward.
Yeah, I think the election has definitely had an effect on the market activity in the US, certainly from our respondents' feedback, most definitely. If you look at, and one of the indicators is the manufacturing PMI, the Purchasing Managers Index, and that gives you a feel of what's happening, although it's not only steel related, but it gives you a feel of what's happening in the market itself. And March this year was effectively the last time it was in growth, and leading up to the elections from April onwards, it has been in contraction, below 50 points. But also from the feedback from our respondents, it's quite clear that, say, from June onwards, there's been less activity, less participation in terms of orders placed on the mills. I've been looking at the inventories, reducing them somewhat and not replenishing them. So definitely had an effect. There was a lot of uncertainty which way the elections would have gone. And obviously we know that Donald Trump and the Republican Party won with a convincing win. I posed the question to our respondents recently, and one of the questions was, which party would you like to win in the election for your business? Not from a personal point of view, but for your business and for the steel market in general. And bar none, everybody indicated and said Donald Trump and the Republican Party. So from that basis and from that answer, it's quite obvious that the business activity will increase or should increase, especially from the rhetoric that's been coming out from Donald Trump and the Republican Party.
Yeah, that seems to be the expectation at this stage.
Absolutely, yes.
Michelle, turning to you, so same question really, because you're also in conversation with US contacts, and they'll have kept a very keen eye on what's happening.
Yeah, I mean, from the stainless contacts or research partners that we speak to, activity for them started to really fall towards the summer months, which I think initially a lot of people put down to it being the summer. Activity traditionally slows at that time of year. And then when it didn't come back in September and head into October, that's when really people started to change their opinion and put it down to the election being the main cause. And I think it's because all the exit polls and all the information coming out of the US was suggesting that it was going to be such a tight race that nobody knew which way it was going to go, and that was causing a lot of hesitancy in the market. They didn't know which way it was going to go, so a lot of businesses put their decisions on hold. So yeah, I mean that's kind of how it was in the run up to the election. People's, the pricing was going down for the stainless market at the same time. The alloy surcharge was falling, so that was reducing confidence in the market. So we had the decreased activity and decreased prices coming through at the same time. People's expectations for post-election is, I don't think most people were happy that it would pick back up either way after the election, mainly because, it was a lack of knowing who was going to be in the administration in the new year that was causing the hold-up. So people's expectations are that things will pick back up in the new year once the new administration's in place.
So I guess at this stage, it's probably more down to an end to that uncertainty than obviously anything that can be implemented in the near term.
But obviously we're coming up to year end, so people naturally keep their inventories very low at this time of year in the US market anyway. So I guess that the main differences will start to come through in the new year. I don't think there'll be very little immediate impact on buying activity.
Yeah. Jon, just sort of to pose one of the questions, a question I guess drawn from the video that we listened to a moment ago with Laura. I mean, clearly the markets responded very promptly to the end of that election period that had caused so much uncertainty. I guess, there's just an uptick and a bit more positivity by the fact that there wasn't a protracted outcome. It was clear cut, and the market, in a sense, can move on, I guess.
Well, that was it. The increase that we saw in the share prices, it was pretty startling. It was showed that there is going to be winners. And I suppose there were some that dropped as well. There are going to be losers as well with this new administration. But it was quite a surprise to me that it would come around so quick. And I think that really sort of shows just how much this uncertainty was weighing on not just the steel industry but sort of markets in general.
Yeah. We'll talk about the winners and losers shortly, in particular with relation to industrial sectors and I guess the countries that trade regularly with the US as well. One of the things that we've heard that Donald Trump wants to introduce is tariffs, and they'll have a key part to play going forward, I guess, in his negotiations overseas and otherwise. So what are your expectations, Jon, at this point, and when will we see those come into play, do you think?
Well, throughout the campaign, Trump's referred to himself repeatedly as tariff man. So this is going to happen. The kind of numbers that he's talked about are, say, 10 or 20% general tariffs across the board on all imports into America. There are other sort of tariffs that he's mentioned, specifically targeting, say, China. Also, there's been talk of sort of reciprocal tariffs as well. So this could mean any country that applies an import tariff onto American goods going into their country, he plans on putting the exact same tariff onto their goods. I think that's really sort of a negotiating tactic. He's trying to get the upper hand here and play to the sort of the strength of the US as a massive importer of goods. when we're looking sort of more specifically at sort of the steel industry, we've heard lots of issues with imports from Mexico and from China. Even the EU have been sort of singled out in its comments. And when you look at sort of the figures for 2024, we were having a look in the office just the other day. The output from American mills for the sort of the first 3 quarters was around about 60 million tons. Imports from around the world were about 20 million tons. So there's a lot of room there for steel mills in the US to pick up if these imports do go down. We've specifically sort of seen and mentioned, like I say, Mexico, and around about sort of 11% of their imports, of the US imports, are from Mexico. One of the issues with the Mexican sort of material is there's worries that this material is sort of first coming from China and then being sort of re-exported into the US. This is one of the things that we've seen that's been brought up by both sides, both Democrats and Republicans have really sort of want to get a grips with this. So I'd expect there's going to be some kind of renegotiation of the USMCA. I think that's going to be something that's going to happen very quickly. Other tariffs, like I say, I think it's going to be it's going to talk big, but I think eventually they're going to be sort of more targeted and more specific, and there will be. I'd expect there to be sort of plenty of sort of exemptions as well, because the US does need this material, and what we don't want to do, or what he doesn't want to do, is get into a position where we're just raising prices and making things more difficult if there isn't that ability to produce that material in the US.
Yeah, and I think we've heard it mentioned plenty of times now. And Trump sees himself as this deal maker. He's very transactional in the way that he operates. So I guess that mention of tariffs is a bargaining chip as well at this stage. So that there may be exemptions, as you say, that benefit certain parts of the world. And I think Laura mentioned in particular that Mexico's negotiation on that front might be tied quite closely to the immigration issue, which was a key sort of election pledge of the Trump administration. So we'll see. Be interesting. Michelle, I mean, clearly stainless, very specialist field. I think you've spoken before about, the nature of imports that the US brings in. Do you think that tariffs will have a big impact on that material as well?
I think it will. Last time when the 25% went in initially in his first administration, we did see a reduction in the amount of stainless imports coming into the US market. The pandemic skewed that data a little bit, and the imports have gone back up as the domestic mills were too busy, and there was supply issues domestically, and they have started to come back down, but they're still higher than where they were before the pandemic. So we do have that still. So yes, I think more tariffs would help bring that back down again. But people's main concern, for the research partners that I speak to, is that if there are too many tariffs, or he goes a bit over the top on some of these tariffs, then it will have an inflationary effect in the US market and will drive inflation back up, which would have a negative impact, I guess, on the speed at which the interest rates are going to start to come down. And would have a knock-on effect for some of the industries that they're supplying into, construction infrastructure. They're all waiting for the interest rates to come back down, so that the projects can get started again.
Yeah, it's going to be fascinating to see the effect.
So while everybody's I guess in agreement in the US market that more tariffs in general would help the domestic market, and it's certainly good for the US producers, there is some concern that too many would be counterproductive.
And it's come at a time, of course, where prices are very low, so everyone's wanting some trigger to see that.
But they're very low in the US market, but for the stainless products they are very high globally. So that would make the US stainless prices even higher, and the gap that we've seen narrow between the US and European prices in the last few months would start to go back up again, would start to increase, because we're not going to see those levels of increases in other markets.
Yeah, suddenly reigniting the appetite for imports potentially. Yeah, there's a whole host of market forces at play, aren't there? We'll keep a close eye on it, of course. You will. Stuart, I mean, we heard Laura mention the effect on the stock market and Nucor and Cleveland Cliffs and the other US steelmakers. Their stocks went up. They're clearly expecting quite an uptick. What's your expectation, and particularly in light of this tariff threat?
I think taking a step back and you have a look at the prices where they've come off from in terms of low carbon hot rolled coil prices, I'll use that as a basis point. Back in January, to give you an example, it was $1,100 a short ton. Now it's hovering around about the 700, 710 a short ton. And I think in itself, although, as Michelle alluded to, it is a lower price in relation to where the prices have come off, globally, there's quite a massive difference. I mean, if you just compare, say, the domestic price on hot rolled coil and you relate it to a metric ton and you relate it in euros, you're looking at about 725 euros a metric ton. And we can see in Europe, hot rolled coil prices for low carbon is around about the 530. So there is a big difference. And that big difference comes from the protection or the tariffs that are implemented in the US. It does create, it could create inflationary pressures as prices go up and the consumers get more confidence. As interest rates come down, it can have inflationary pressures. So there's no doubt from our respondents' point of view that from a Trump perspective, Republican perspective, it will give that opportunity to replenish the inventories with prices going up. And yeah, that's why we saw probably the steel producers' share prices shoot up after the elections, because they know that those prices are going to increase. So, and then from another point of view, and I'm going to bring in Europe here, I think it's important that there are some companies over the past couple of years that have moved their production facilities, not replacing it, just adding it, and placing it in the US. For this very reason, there are companies now that have already fast-tracked that strategy, and that will just bypass any finished product imports tariffs that may be implemented down the line.
Yeah, absolutely. There's a lot to think about. I mean, looking forward, Jon, we'll clearly be considering at MEPS what the effect might be on other markets, because we cover steel markets all over the globe, clearly. So I guess steelmakers in the EU, traders, people that export into the US, anywhere in the world, will be concerned about the direction these tariffs are going. How will we expect that to play out in particular? Let's talk about the EU first, I guess.
So I think the EU really have to sort of play sort of a balancing act between sort of applying any tariffs to American goods, not necessarily iron and steel, but under sort of World Trade Organization regulations, they're allowed to apply other tariffs on other material and other goods coming from America to an equivalent value. But I think they're really going to have to be careful balancing a response against American tariffs with potentially sort of tariffs that could be applied to European goods, say in response to things like the electric vehicle tariffs that the EU very recently applied. There's already threats there from China that they're going to retaliate. So people in Europe are really going to have this sort of fine balancing act. Particularly, I think it's going to affect Germany, already currently struggling, particularly within Europe. They're the largest of the European exporters into the US, roughly sort of a quarter of all material from the EU going into the US comes from Germany. So it's going to be a real sort of fine balancing act for for these countries, and same for the UK. It's going to become a decision for exactly how we choose to align ourselves sort of between these two big market players, USA and China.
I think you spoke before we started recording, Stuart, about Germany and how weak the economy and the market is there now. I guess this is a real nervous time for the steel industry there now.
Yeah, I think our respondents in Germany are very nervous, both domestically in terms of their political setup, but also with regards to the effect that the US import tariffs will have. So I think from that perspective, there's been a lot of rhetoric also coming from industrial players that perhaps the European Commission needs to have a reset and rethink in terms of where Europe goes as a whole. I think UK is in a slightly different position since we're really outside of that, but the same would apply possibly in the UK. So I think strategies need to be renewed and rethought within all industry sectors in Europe and the UK, definitely.
Michelle, those stainless imports into the US coming from the EU as well as Asia, how do you think those markets are going to perhaps respond to the introduction of new tariffs?
I mean, it depends how far it goes with the tariffs and what impact it has on specific products, I guess. At the minute, I guess the demand is at a point where it would have less impact because there's just less material being moved. Going forward, I mean, a lot of the research partners that I speak with in Europe, particularly Germany, are very worried about further tariffs from the US being just a barrier to more trade. And obviously, the other concern from the European side is if there are more tariffs on Chinese goods and material from the US, then the flow of material from China will increase into Europe as well. So it's a bit of a twofold scenario for Europe. You've got the supply trade with the US direct, and then the reflow of material from any other tariffs that the US put on other markets. Not just China, but obviously Mexico as well. You know, all the markets that have additional tariffs on have to find somewhere else to sell their material.
And it's, of course, it's finished goods as well, and all sorts of products up and down the supply chain. So it can affect domestic manufacturing and industry in Asia and Europe just as much as the steel industry.
Yeah, I mean, if you look at the steel industry as a whole, there are more people that work in the supply chains within the steel industry than make steel. And it will have an impact for throughout the supply chains.
I'd imagine there'll be a weakening effect on prices in Asia if the ability to trade outside that market is reduced in the US. We've already got some overcapacity issues. Would that be fair to say that there'll be downward pressure on prices in Asia? Yeah,
I mean, we've seen that with recently with the Chinese prices particularly. The Asian markets have been struggling like everywhere else with demand and the low market activity. So we have seen China's prices being particularly competitive globally in the markets. And, it's only the European safeguards or the Section 232 in America that help bring that pricing back up just a little bit to keep the domestic producers more competitive. Obviously, the more restrictions they have, the harder they have to work to try and sell their material. There's a lot of capacity that is there and a lot of material that needs to be sold.
Yeah, and we saw from that chart before how much of those imported steel volumes come from Asia, John.
Yeah, but just picking up on the point about the EU safeguards, I think that's going to be quite an important one for producers over here in Europe. The safeguard mechanism is only allowed to be in place for a maximum of 8 years, and they started in 2018 in response to the 232 tariffs. there isn't any time limit on the Section 232 tariffs, but there is on the safeguards. So come June 2026, technically they've got to be repealed, the EU safeguards, and that'll leave European producers, even more trouble. So I think there's going to be a lot of thought going into exactly how the European market can be protected once these safeguards disappear. Whether there's going to be something similar that's going to be introduced, there's not been any sort of decisions made on that yet. But I think the steelmakers and the people at the Commission are going to have a lot of sleepless nights trying to come up with something that's going to protect the European industry.
Just a quick question then, John. In terms of safeguards and Section 232, what is the major difference between the two that will enable Section 232 to carry on indefinitely?
Okay, well, Section 232 is a US law, that a US regulation that essentially allows the president to provide a whole range of tariffs to protect a particular industry. What he needs to do is say that this particular industry is critical to national security. So they have to go through sort of investigation, and that happened back between when he was nominated, when he was inaugurated, and then until early 2018. It was pretty much the first job that he gave their Secretary of Business, and that investigation showed that obviously the steel industry is critical to national security. That gave him the leeway to put these tariffs on. The safeguard tariff is more of sort of like a WTO sort of mechanism, and that's really sort of designed to protect your industry from any particular sort of one-off effects. And the one-off effect that the EU cited was sort of the change in trade patterns caused by the Section 232. So the safeguards are really sort of in response to those. But because there's different grounds for these tariffs, there's slightly sort of different rules. So the safeguard ones, I'd expect those to be to expire, say June 26th.
Do you think something will come in to replace that then? So another name or another angle to try and keep those tariffs in place?
I think that I think the European industry will want something like that. I think the European Commission will want something like that. Exactly what flavour, what justification, what they sort of say to get that protection in there is anybody's guess at this moment. We have heard that there has been sort of some conversations about this yet, but it's far too early for any kind of to know exactly what they're thinking.
I guess it'll depend on what comes out of the Trump's administration's new tariffs are and what impact that has on the trade flow of material.
Yeah, I mean that could be the perfect excuse.
Yeah, and I guess they'll have a couple of years now to see what they are and what the impact is before putting something else in place.
It seems fairly clear that CBAM alone is not going to be able to mitigate that threat, isn't it, really?
Yeah, well, CBAM's not really designed to sort of protect the industry. CBAM's more sort of designed to level the playing field, to use the EU term. Essentially, the European mills currently have extra hoops to jump through with the environmental regulations, and CBAM was kind of intended to apply that to everybody that was outside of Europe.
I guess I think when you talk about environmental regulations there, it's probably a nice point to segue off into what Trump's priorities are going to be, how the US priorities generally are going to change in terms of manufacturing and sectors that can benefit from his administration. And I guess the green agenda has slightly shifted. Do we see that as being key to how the economy is going to evolve in the US?
Can I say it?
You can do it.
Drill, baby, drill. I think there's going to be a big change in mindset between sort of the Biden and the Trump administration on this. He's made that very clear. I'd still expect there to be growth in some of the sort of the electric vehicles, but I think we're looking much more at producing more energy within the US, looking to use that in the US, looking to export that. I think that's the direction we're going.
Energy perhaps not of a green nature, though.
Certainly not. No.
Yeah, there'll definitely be a rollback in the green agenda. They're going to be the losers from the Trump administration.
And I think there was talk that perhaps that mandate that Joe Biden had introduced for EV uptake might be pulled back as well. So, despite Elon Musk being central to Trump's campaign, the appetite for EVs might become even weaker in the US.
Yeah, I mean, it's certainly going to be interesting to see how that plays out. He did say as part of his campaign trail that he would roll back some of the green and electric vehicle initiatives that had been put in the previous administration. Bearing in mind that, one of his biggest advocates during his campaign is Elon Musk and his Tesla. So yeah, it'll be interesting to see how that works and to what extent he decides to go down the electric vehicle route. They're certainly going to be one of the industries that I think is keen to see what happens in the sort of the near term.
Trump in a Tesla is an interesting concept, isn't it? It's not something that we've thought about before, but there you go.
Yeah, I mean, there's going to be other industries, I'm afraid, that are probably going to see a rollback of projects as well. Obviously, Biden's administration put a lot of infrastructure spending and projects out there, and I'm guessing that some of those may be shelved as part of Trump's new, if they've not already been put in place with the finance. So they might see a decrease in activity as well. But I think it's fair to say that anything within the oil and gas, as John pointed out, and the defence sector as well. He's said multiple times that he wants to bolster defence in the US. So they're certainly two industries that will benefit from the Trump administration.
I think Laura mentioned, Stuart, that talking about those government stimulus measures, as we could refer to them, the CHIPS Act and the Infrastructure Act, they've already provided quite a lot of impetus to the market. The Infrastructure Act, as I gather, has yet to be assigned a lot of that funding. So it would be a little detrimental to some of the steel sector that's anticipating that funding if it was pulled away. I guess it might take a different form.
Yeah, I wouldn't imagine that the Republicans would repeal any of that funding that's in place. I think that will carry on. I think if you look at the bulk of the infrastructure spend, I think there's about $3 trillion still available. I think that will be utilized to bolster business up. In terms of say those companies, those tier one companies that supply to the automotive industry, they've had a very difficult time of it lately, globally. Well, I wouldn't say in China, but say within the US and in Europe. Which way is it going to go? And quite clearly now, fossil fuels is the name of the game now, as opposed to renewable energy, and perhaps the focus on the automotive industry in the US will change accordingly. I cannot see that electric vehicles will go out the window because there is a world climate accord that everybody needs to follow, that type of thing. But I think the emphasis, the foot will come off the accelerator, as it were, in terms of electric vehicle, and maybe put the brakes on it for a while. But certainly the emphasis is on bulky projects in the drilling fields and so forth. So that will make quite a number of the oil companies very happy.
And I guess, the tariffs that we spoke about before will deter imports of all kinds, products across all sectors, and things that consumers have become used to buying might become more expensive. But there's an opportunity there for American manufacturers as well.
Yeah, I think not only consumer goods might have that inflationary effect that you brought up, Michelle, in terms of increasing prices. But in terms of overall prices in the US, it will still be high, and it's been high for quite some time. Michelle recently came back from the US vacation and just commented on the fact how expensive items had become there, especially on the grocery shelves. So that's going to affect every man in the street. So I suppose the Republicans have a bit of a juggling act. Even though they want to focus away from renewable energy, that is the cheapest form.
I guess the fact that the US wants to generate more energy, John, in itself will benefit industry if they're able to generate it more cheaply.
Yeah, I mean, currently they're producing more oil and gas than they've ever produced before. So, I don't think the Biden administration has been sort of neglecting that side of things, but I certainly think there will be the acceleration.
One of the key things that we've talked about previously in relation to the US has been the ownership of US steel. Of course, it's something that's been in the news a lot. It's been discussed and debated by us, and nowhere is it a hotter subject than in the US itself. Of course, Trump's made his views very clear. The Biden administration, or should I say the Harris campaign, took the same direction, the same view in the end. What is it that we're expecting in the coming months from that? I think Laura touched on it, so we had a little bit of insight.
She did.
There.
It was interesting to hear what she said. I'm quite mixed on this. This is exactly the kind of investment that both that the US is looking for. It's looking for other countries to invest in US manufacturing. I think the big problem is the fact that it's US steel, and a lot of baggage sort of comes with that. I think if Nippon had announced they were planning on building a whole bunch of new plants within the US, they would have been welcomed with open arms. But because of the election, because of the issues with the unions and with the exact sort of structure of how that takeover will sort of pan out, there's been a lot of sort of negative press associated with it. So I'm really torn. I could really see it going either way, if I'm perfectly honest. I think it's one of those how he feels on the day kind of a deal.
Well, it sounds like a decision that's still going to land with President Joe Biden. Laura was talking about the timescales and the fact that it should, if the CFIUS investigation carries on as it does, it should fall quite a long time before the inauguration, or at least a few weeks. So I guess there'll be a push now to get that through, at least from Nippon.
There will be from Nippon, and certainly from the boards and the shareholders at US Steel. They were sort of all voted unanimously for it. But I can see President Biden putting this one on the back shelf, if I'm perfectly honest, and not necessarily rushing to make a decision on that. Personally, like I say, I think he'll probably leave that to Trump to decide, and I'm not going to say which way I think it's going to go. I'm not sure.
Stuart, you'll have been talking to your research respondents. So, do they take a view on the US Steel?
Oh, absolutely. I mean the political football, if I can use that terminology, has been utilized in this bid by Nippon Steel, and prior to that, Cleveland Cliffs. But by far and large, everyone that I speak to and every one of our respondents agree that it will be a good thing for Nippon Steel to invest in the US. And that will have other ramifications in terms of growth in the immediate area and also in the US economy. So yes, they really support it. It's quite interesting when Cleveland Cliffs came through with their lower bid of just over $8 billion. That was quickly rejected by US Steel, and the union supported it. Now it's the other way round. Obviously, it's a higher bid by Nippon, over $14 billion, and US Steel shareholders and board members accepted it with open arms. But the unions have essentially rejected that. Sort of aligning themselves more with a US company. But ultimately, by far and large, the MEPS respondents definitely support a buyout like that.
And another thing that might be a hangover between administrations in a way is that East Coast dock workers strike that we were talking about in September. It sort of went away temporarily because there was a settlement on wages. But I guess there was something left over hanging, wasn't there, that might actually happen in February. There is still a threat of strikes. Do you think that situation is still there?
Oh yes, I think that's been parked. I think essentially, maybe from a political standpoint, it's been parked. It was quickly, it started and ended as quickly as it did, within 3 days. It never really had any effect on the imports and never created any delays coming in. But there could be, if that strike is reignited. And I think probably from a container point of view, yes, but it's going to affect break bulk as well. And so there could be huge ramifications with regards to that. And also with regards to shortages, and that will have an ultimate effect on price as well.
Yeah, I think the remaining issue is to do with automation at the docks, isn't
Yes,
it?
that is correct. Yes.
And in many ways, that could be a more complex negotiation than the wages.
Yeah, I think from a union point of view, you want no job losses. And if that's going to come about, well, perhaps we're in for a bit of a rough time with regards to the US market.
Yeah, yeah. I mean, we talked before, Michelle, like tariffs were going to come immediately and imports were going to end, but clearly there could be a potential sort of quite a serious effect if those strikes were to go ahead for a period of time.
Yeah, I mean, like you said, I mean, the majority of people that I speak with are concerned that if the strike does go ahead, I think it's January, then the discussions regarding the automation are not going to be as easily resolved as what the wage one was. Obviously, we've got the election out of the way as well, so the speed at which it needed a resolution isn't there. So yeah, I mean, another strike in January could have quite a significant impact if it went on for a long time. I mean, some of the research, I was actually in the US the week of the port strike, and some of the people out there that we were speaking to had already been contacted to say that there was going to be additional costs and maybe potential delays within a day of the strike. Obviously, it only lasted 3 days, so a lot of that didn't materialise, but just, you know, with the threat of them going on strike, you know, there was a lot of initial panic, and that created a lot of additional buying with the domestic mills as well over that 3-day period, which pushed out the stainless mills lead times by a week or two in a very short space of time. And that's kind of what, you know, that was just 3 days. So imagine if it went on for 3 weeks or 3 months, we could get back to a situation where we've got vessels lining up on the East Coast again, waiting to get into the docks.
Yeah, potentially another upward price pressure, I guess.
Yeah, yeah. I mean, it would certainly add to the upward price pressure in the new year. Yeah.
Okay, I mean, we've covered an awful lot of subjects, a lot of bases. I think if we could just perhaps sum up by each of us giving a bit of not me, but you guys, the experts, giving a view on sort of the near-term outlook for prices in the US, that'd be really useful. I'll ask you first, Stuart, sort of moving to the end of the year and into the new year, what do we expect?
I'm not too sure if perhaps it will have an immediate effect for the rest of this year. I think the industry will still absorb what has happened, maybe wait a little bit longer, but demand is certainly going to kick in the early part of next year, which will create a situation where companies will need to replenish their inventories. So there'll be more buying activity, and the steel mills will take that opportunity to firm up on the price and increase them accordingly.
Of course. Michelle, Stuart talking about the carbon market. What's your take on the direction of stainless steel prices?
Yeah, I mean, I think we've probably hit the lower point on the stainless prices for this current cycle. So we're going to see pricing start to move up. The speed at which it moves up, I guess, will depend initially more on what happens with raw materials in the short term. So we might see just very small increases over the next few months. But price rises are certainly in the future for the stainless products as well.
Jon, what's in the foremost of your thoughts for the coming months? What developments do you think we'll see?
So I think that the prices have been sort of as low as they are, not just in the US, but sort of globally because of the lack of demand. And until that really starts to increase, then I think, yes, well, I mean, we're going to see some gains in prices, certainly sort of from the sentiment. But I think until that sort of demand picks up, until the economy sort of starts strengthening, and again, until we start that new cycle, I think that they're going to be sort of, any gains are going to be tempered.
Okay, excellent. Well, we'll leave this episode there, but guys, thanks ever so much for joining me on the show again.
Thank you.
Jon, thanks for your input. Michelle, great to have you on again.
Thank you.
And Stuart, thanks for being a part of it.
Thank you very much.
Thank you.